when we talk about gold breaking out into nominal highs against the US dollar, in other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the US dollar, gold has already established momentum. It's already established a trajectory. And if I had to guess why an American database like Rural Investment Media is becoming increasingly non-US, I suggest that the price action in precious metals in those securities has already demonstrated thesis.
In today's episode, Rick Rule, a seasoned investor and former CEO of Sprott Asset Management, remains a key voice in the world of precious metals. His recent forecasts for gold and silver suggest both metals are set to play an increasingly important role in the portfolios of savvy investors. According to Rule, the growing global distrust of fiat currencies, fueled by inflationary pressures and central bank policies, is setting the stage for gold to become a crucial hedge against the weakening purchasing power of the US dollar and other major currencies. Rule highlights the significant buying activity by central banks around the world, particularly in countries like China and Russia, as a clear indicator of the ongoing shift towards gold as a store of value. These nations are diversifying away from U.S. treasuries, seeing gold as a safer, more reliable asset in an environment where geopolitical tensions and economic instability are mounting. This institutional demand, Rule argues, is likely to sustain and support the price of gold in the coming years. Turning to silver, Rule sees an even greater potential for upside. While often overshadowed by gold, silver's dual role as both a precious metal and an industrial commodity positions it to benefit from both economic uncertainty and industrial demand, particularly in the context of green technologies like solar energy. Rule notes that silver markets tend to be more volatile than gold, but this also creates opportunities for substantial gains, especially for those willing to manage the inherent risks. In conclusion, Rule's forecast suggests that both gold and silver will continue to rise in value, driven by central bank purchases, investor demand for inflation protection, and the increasing industrial uses for silver. For investors, the current environment presents an opportunity to hedge against potential economic turbulence by diversifying into precious metals, with silver offering a more speculative but potentially highly rewarding play. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Purchases of silver, which you've correctly documented, surprised me. It isn't something that I've seen before. And I've been struggling. Well, I haven't been struggling. I've been asking people who are smarter than me what it means. And I haven't received a satisfactory answer. Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries in silver. Part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. But what you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. I also, if your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying that Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. But what I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it, and those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market. An allocation to the higher quality silver stocks and the silver juniors, a small allocation to be sure, an allocation that you can afford to lose 30% of if you're wrong, and an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday, is something that some should consider.
Silver breaks 33, level with 5% surge. Gold hits new record high. BRICS hints gold-backed payment system. Economic uncertainties fuel precious metals rally. What's next for investors? In a dramatic turn of events for precious metals investors, silver has surged past the $33 per ounce mark, registering a remarkable 5% increase. This breakthrough comes as gold continues its record-breaking run, touching a new all-time high of $2,716 per ounce. The precious metals market is witnessing unprecedented momentum driven by a combination of geopolitical tensions, economic uncertainties, and shifting investor sentiments. Investors are closely watching potential technical formations in silver's price chart. Some analysts suggest these patterns could indicate further upside for silver prices. While predictions vary, historical precedent supports the possibility of significant price movements in silver. Between 2001 and 2011, silver prices surged from under $5 per ounce to $50 per ounce, representing a 10 times increase. Reports suggest the BRICS alliance, Brazil, Russia, India, China, and South Africa is developing a new payment system. Some sources claim this system may include gold as a payment option, potentially as part of a strategy to reduce reliance on the US dollar in international trade. However, official confirmation of these details is still pending. The current surge in silver and gold prices reflects a combination of economic uncertainties, geopolitical tensions, and technical breakouts. However, investors should approach these projections with caution. The precious metals market is known for its volatility, and past performance does not guarantee future results. Additionally, the potential role of gold in the BRICS payment system, while significant, is still developing, and its full impact remains to be seen. As global economic dynamics continue to shift, precious metals are likely to remain in focus for investors seeking to diversify their portfolios and hedge against economic uncertainties. Now, we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Well, I've talked in your show before about the fact that precious metals and precious metals related securities comprise less than 0.5% of savings and investment products in the United States. I've used a colorful analogy that they're as important to the economy as a pimple is to an elephant's behind. You know, they kind of don't matter. But it's worthy to note that over the last 4 decades, that market share has been 2%. So if demand for gold and silver merely reversed to the 4-decade mean, which is what I think it will do, that implies a 4-fold increase in demand. And that would do a very, very interesting thing to price. Away from arithmetic and into narrative, I note that inbound inquiries, which is to say subscribers to Rule Investment Media, are currently running about 50 per day. The majority of those, interestingly, are non-U.S. now. And they are coming from everywhere. A couple of interesting trends. One stands to reason, a lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk, and have, I think, come to the rightful conclusion that they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my increase, a little less, 30% of my increase, are now coming from young women. It used to be that the gold audience looked like me: old, fat, bald, white, rich. And there is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, which, as you know, is now, at least nominally, in the bullion business. And they have reported that a surprising number of the buyers of gold have been younger, and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies when we talk about gold breaking out into nominal highs against the U.S. dollar. In other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the U.S. dollar, gold has already established momentum. It's already established a trajectory. And if I had to guess why an American database like Rule Investment Media is becoming increasingly non-U.S., I suggest that the price action in precious metals in those securities has already demonstrated thesis, while in the United States, the thesis is still being questioned.
What do you think of Rick Rule's take on gold and silver? Do you agree with his view that silver has the potential for a major breakout? Rick has pointed out that while gold is steadily climbing, silver's volatility presents a unique opportunity for those who can handle the ups and downs. He also emphasized that central bank demand for gold, particularly from nations like China and Russia, is a strong driver of future price growth. But when silver breaks out, Rule believes it could lead to an amazing financial circumstance for speculators. Let us know your predictions in the comments. Thanks for watching, and be sure to check out this next video. It's a perfect fit for you. See you there.